What's up everyone, welcome back to the Idiot Investor Guide channel with your host Guy Davidson. Today is going to be Hatch Portfolio 4. Good day to do an update. We've seen some cranking Tesla shares. I'll show you some new shares that I've bought. I've also sold a few others. I've been doing probably too much movement in Hatch. That's why I think that I might be moving a bunch of my investing to stake because I've had so much back and forward movement recently. But yeah, I want to show you a very spur of the moment investment that I did that's actually working out really well for me. Also had a bit of a change in the way I think about investing for dividends or for high growth. And that's thanks to David Kelly, one of the subscribers. So thanks, mate. And I'll show you guys in a second what David has suggested to me that's really changed the way that I think about that. So let's dive in. So you can see I'm up reasonably early filming this. The American markets are still open. My portfolio is doing really well, so up almost 30%. Big part to do with Tesla. So Tesla's sort of gone up 5% each day a couple of times this week already. So that's awesome. I've got pretty much my biggest position in Tesla, my second biggest. So yeah, that's really helping out the portfolio. You can see there's a bit of a hit in end of last month, but we're climbing back up again, and that is in large to do with Tesla. So here's how my portfolio sits at the moment. You can see there's been a little bit of change. So 71% companies, 29% ETF. That's if you watch my last video, you'd see that I'm starting to move all my ETF investing into Sharesies, and Hatch and Stake are mostly going to be focused on companies. And actually, I'd say it's going to be 90% focused on companies moving forward. I'll tell you why I'll have a little bit of ETF investment through them in a second. So we just run through these. Tesla is obviously performing really well. 77% return, $300. That's awesome. And current price 1,012. My average cost price is just over 600. The first time I bought Tesla was actually at 400. So I wish I'd invested more at that point in time, because I'd be laughing away right now. But I think this is one that's going to continue to grow. I'll keep investing in Tesla along the way. It's one of the stocks I think have the biggest potential for high growth in my portfolio. We'll just go through the companies first. So Pinduoduo, this one was one of the e-commerce YOLO investments I did last month, month before last, sorry. It was because I looked on Wall Street, not Wall Street Bets. That would be retarded to do a bit of Wall Street Bets. Shout out Wall Street Bets. That stuff's hilarious. I was on Simply Wall Street, which is an investment type app, and it was saying that this was a potential for high growth. So it did pretty badly for the first sort of month. It was quite a long time, and then at some point it jumped up by about 20%. I thought about selling it then because it hadn't done so well, but I stopped myself from being an emotional investor and said, no, well, I bought it thinking it's going to be a good long-term investment. China's a big market. This sort of stuff took off around COVID time when people were at home with not a lot to do. So I'm going to leave my chips where they are and hope that over time this continues to grow, and it's not just because of the COVID effect. It's not a huge amount of money in there. It's only, I think I invested about 500 or something. So it's not a huge amount of money, but yeah, I think I'll just leave it there for now, because if it does take off, I want to have some meaningful amount in there that it will actually give me a decent return. And at the moment, it's doing really well. Alphabet, it's gone up a bit again. It's sort of retracted a little bit over the last month, but yeah, today seems to be, or especially the last couple of days, seem to be pretty good days for the US market. No idea why, to be honest. Nikola. Yeah, so everyone knows about Nikola, the hype train, the new Tesla, the knockoff Tesla, some people would say, including my brother. But yeah, I chucked. It was really just a completely random investment. My friend had just said, hey, there's this new stock that has just gone public that is the new Tesla, and without researching whatsoever, I just threw a bunch of money at it and hope for the best. I just put whatever was left in my Hatch account at the time into it, and over the first day, I went up 70% or something. First 2 days I was up 100%, and that's when it sort of hit its peak, and my brother said to sell it. I was too proud, and it came back down to about 60%, and it sort of fluctuated around that 60% level for me since then. So it's holding pretty steady now where it is. Who knows whether it's going to crash and burn or be a super success like Tesla was. They obviously would say they will be. A lot of people are skeptical, and they still haven't really released anything yet. December is supposed to be the day or the month, end of this year, where they unveil a working version of their Ford competitor, basically. So yeah, I'd be interested to see how that truck goes. And look, it's not a whole lot of money that I've got in there, so if it doesn't come off, not a big deal. If it does come off in a way that Tesla did, I bought in at $67. If that then goes up to Tesla type, I bought in at $42. If that goes up to Tesla type numbers, $1,000, I'll be laughing my way to the bank. So bit of a gamble play. Again, I'm an idiot investor, so do as I say, don't do as I do. But we'll see how it works out. Apple, I sold Fiverr. Fiverr was not doing well for me, so that was a bit of I again don't know enough about the company to know if it would grow long term. Maybe it would, maybe it wouldn't, but I just felt like it was a bit of a random investment anyway, a bit of a knee jerk. So once it got up to decent levels, so a little bit above what I'd paid for it, I sold it and bought back into Apple. Apple, I never really explained in my previous portfolio update why I sold Apple in the first place. So that was around US and China tension. I thought it might result in China putting massive taxes or not allowing Apple to sell their product at all in China when Trump was doing his thing and pissing them off. And I also read somewhere that Apple gets a heap of its production done in China. So I kind of, on a bit of a speculation, thought that might impact it big time. So that's why I sold out. And then I realized it's probably a bit too much of a stable consumer product to have a meaningful impact from that. And it doesn't look like it's happening at the moment anyway. So I've bought back in. I think that it's a good long-term stock to have, and Warren Buffett would agree. And who are we to disagree with the Buff man? So into the ETFs. I've got my biggest position that I've actually invested my money into is the Global X Super Dividend Fund. Now, David Kelly, one of our YouTube subscribers, raised a really valid point and linked some articles to me, and I'll put them below in the description. He was basically saying that it doesn't really make sense to be a dividend investor in New Zealand while you don't need the money to live off as income, because you get taxed on the dividends, but in New Zealand you don't get capital gains tax on shares. So if you are buying and holding shares for a decent amount of time, I think short term you might still, but if you're holding them, you don't get capital gains tax on the growth of those shares. So while you're young and building your portfolio still, if you want to be as tax efficient as possible, you should just invest in high growth stocks. I hope I got that right, David. That's what I understood from that. So drop a comment, make sure I got that right. Correct me if I'm wrong, but it made sense to me. So what I'm thinking is I'll probably end up selling this super dividend fund and redistributing that into some of these high growth stocks. But the one ETF I will keep that I can't have in Sharesies at the moment, although when Sharesies comes out with US stock, that could all change, is the ETF, the gaming ETF, Gamer. This is actually doing really well, 12%. It's again gone up quite significantly in the last few days. So I don't know what's going on in the American markets, but everything seems to be going up, which seems ridiculous considering their current situation. So that's one that currently you can only get to through one of these platforms that allows you to invest in the US, like Stake or Hatch. So that's why I'll keep investing. That'll probably be the one ETF that I continue to invest in through Hatch. And this is purely around cost efficiency. So in Sharesies, you don't pay a fee when you invest into ETFs. So through Hatch, you'd be paying at least $3 every time you invest into an ETF, which doesn't really make sense to me. It will cost a lot of money. And that's why I'm looking at doing a bunch of my investment in the US through Stake, because if you haven't seen my video, go and watch it. I did a Stake versus Hatch breakdown of the costs, the fees, and it worked out that with the amount of money and the frequency I'd be trading, that Stake's going to be more cost efficient, because the higher foreign exchange fee when you move money in and out wasn't as big as the overall transaction fee would be for how frequently I was trading stocks, because there's no transaction fee in Stake. So I'll be leaving all of these in Hatch. I won't be moving them, but I think I'll definitely look to do my US investing in the future through Stake, any new investment. But that might all change when Sharesies comes out with their US capabilities, because I'll be very interested to see how they set that up, because they're all based in New Zealand dollars, whereas Hatch and Stake are based in US dollars. So I don't know how Sharesies is going to do it being in New Zealand dollars, but investing into the US. I'm assuming they might have an additional subscription fee, or they'll include the foreign exchange fee when you buy and sell stocks. Not too sure. I'd be very interested to see, as I'm sure you all are. That's about enough for today. So we'll go through. Just wanted to give you a quick update on where I was at and what I was thinking. Big shout out to David Kelly for changing my mind on investing in dividends and going all in on the high growth for at least the medium term while I'm a bit younger and don't need the dividends to be living off. Like and subscribe if you want to continue to join the journey. I'll be coming out with my Sharesies number 4 portfolio very soon, as well as my first Stake portfolio. So look out for that one. I've got a few differences in what I invest in through Stake, and even invested in a Brazilian company. So go check out what that is. Till next time, guys, we'll catch you here on the channel. Have a good one.